Good morning, everyone, and welcome to Morning Markets. Today we're going to focus in on a market that we haven't discussed in recent months, that of Canada, very much looking at the decision or the surprise decision by the Bank of Canada to increase interest rates yesterday. So let's look at the decision from the Bank of Canada yesterday and why that was a surprise to markets. So markets have, as we've discussed in many instances, are able to price interest rate expectations and policy changes. There was no expectation of a policy change from the Bank of Canada yesterday, so that increase in moving the policy rate from 4.5%, where it has been since January, when they paused, up that 25 basis points was certainly a surprise from a market perspective. When we look at the rationale and look into what the Bank of Canada are saying, there are very similar dynamics that we can take from the statement to other markets across the globe. And if we look into that in a bit of detail, really growth in the Canadian economy was stronger than really was being expected. We were seeing a recovery in the housing market. And most importantly, I suppose as well, that inflation, whilst declining, wasn't declining at the speed that might have been expected. And indeed, looking at the data for last month, we saw an acceleration of inflation from 4.3 to 4.4%. And there's an interesting sort of takeaway in the bank's statement itself, where they say excess demand in the economy looks to be more persistent than anticipated. And I think that is the statement to me that brings to the forefront that real conundrum or challenge that central banks face across a number of developed economies, no more so than the Federal Reserve in the US. Important because we look to next week, we've got a Federal Reserve decision. We probably have the market at the moment pricing maybe a pause in interest rates or the possibility of 0.25% there. I think pause is probably the more central scenario from the market at the moment. But certainly when we look at some of the economic indicators, they would fall into that sort of discussion that we've just alluded to with Canada in terms of a robust employment backdrop, inflation maybe not falling as fast as would have been expected. So certainly it brings added focus to the meeting next week for the Federal Reserve, and indeed also the CPI data that we get from the US as well. We also yesterday had the Business Roundtable quarterly outlook in the US, and I think this also helps provide context to those previous comments. Looking at what those CEOs were saying, there was an intention really to not change hiring plans significantly. There was an intention to maybe increase investment slightly more than had been expected just when we looked at that data last quarter. So again, feeding into that discussion, yes, things slowing a little bit, but is it sufficient to allow inflation to decline at that rate that's been expected? I'll leave it there for today, but please do join us again tomorrow.